Yo, what's good, guys? Today we're going to be going over what I believe to be the best trading strategy going into 2026. It is going to be the continuation model. So there's a couple things I'm going to have to preface before we get into this video. First thing is that 2026 really has no relevance here. I've been trading this strategy. I'm going to keep trading it through this year, and I'm also going to trade it probably for the rest of my trading career. So don't worry, just using 2026 for the title. Nothing special to 2026. But I also want to go over if you have a trading strategy that is different than this. Trust me, you're not missing out. When I say the best trading strategy, I really just mean that I think it's a simple strategy and it's a good one to learn if you're lost. But the ultimate best trading strategy for you is just going to be the one that makes the most sense, right? You can make a lot of strategies work if you trade continuation, if you trade reversal based, if you're trading ICT, trend lines, or supply and demand, whatever it may be. You can make it work out as long as you use good risk management, good psychology. It'll be fine. So don't switch. If you're trading something and it makes sense to you, go with it. But this is for the people, if maybe you've started trading recently and you're trading ICT and it really just doesn't click. This is kind of like fading that. It's the opposite. So hopefully that'll make more sense to you guys. And then also, if you haven't even started trading at all, maybe consider picking up continuation. It's a good way to start. So we're going to be going over why I think that it's a great place to start, why I think it's one of the best trading models. And then we'll also get into the general framework that I use for my trades, and I'll show you guys some examples. And then if you're interested, want to check out more, a lot of people trade continuation on social media, so there's other people you can check out. Or if you want to go back to my channel, I've got a lot of backtesting videos, I've got trade recaps and other informational videos talking about continuation. So there's plenty of data, plenty of knowledge in there. You could probably become profitable alone just by watching YouTube videos. You don't need to buy anything. So if you want to check out all that stuff, I recommend it. But we're just going to get straight into it. So the first thing here, why do I believe this is one of the best trading strategies? So first off, market moves in trends, follow them. That's all I've got here. Very simple. I mean, I'll explain it to you. But all it is just pretty much since the beginning of every stock, beginning of every index, right? The market is moving in trends. Obviously, there's times in a shorter term when we're going sideways, but generally we're either moving up or down, right? Bullish or bearish. So if we're moving up, all I'm doing is following along with the trend. Obviously, there's a little more to it, but if the market's moving up, who am I as a retail trader to say this is the exact point when the market's going to reverse? I know there's some people out there that bottom and top tick, some people that trade reversals and they make it work. But generally, if you want to have a high win rate, you just need to follow along with the trend, especially in a world right now where prop firms are so common. I only trade with prop firms. So if I need to be successful in a prop firm, I'm going to want to have a high win rate so that I can get frequent payouts and make sure that I'm making a lot of money because they are not made for traders with a low RR system. That's just the way they work. So high win rate, that's what we're looking for, and you're going to get that with continuation. All right, so the second thing here is continuation traders are not using many complex concepts. So I don't want to speak for everyone, but at least for myself, in terms of like individual concepts, I'm only using a few things. It is a pretty discretionary model, and it takes a lot of practice to get to the point where you're able to just trade so simply, right? You kind of take a step back from using more stuff the more you learn. It's almost counterintuitive, but now the only actual concepts I'm using are like liquidity and fair value gaps, the most simple ones, but I'm not looking at all the other stuff. I'm mostly just paying attention to, like I said, liquidity, that's number one. And I'm kind of just looking at the market volume and the trends. Very basic stuff, very beginner level stuff that you can read anywhere, right? And then the last thing that we're going to talk about here is the longevity. In terms of a strategy, I think that it's good to develop something that's going to be around for a long time. As I said before, the market has moved in trends since the beginning, right? So as long as the market's moving in trends, then continuation trading will work. There's no reason for it to stop working if the market is moving in trends. So I'm going to keep trading continuation because it has pretty much infinite longevity. If you're trading a mechanical model, it's pretty much bound to have alpha decay and to lose its ability over time because the market changes over time. So we kind of want to talk about the how here. Like I said, you can't really boil it down to a checklist. I can give you guys the general framework that I use, and then by watching more videos on continuation, it'll start to make more sense. But I'll give you guys some good thoughts here to, think about. And after this, you can go watch more of my videos or watch someone else's videos, and, you'll just start to learn over time. You're going to need that practice. So to start off, the number one thing, first thing that we're looking for, basically the most important thing here is we want a strong and reasonable draw for price on the higher time frame. When we're looking to trade continuation, you want to be trading based on the higher time frame. The lower time frame only tells you so much about the markets. Looking at the higher time frame really shows the whole story and which direction we're going toward. Again, there's going to be people that make it work only ever looking at the 1 minute time frame. But if you're trying to trade along with the trend, trust me, I really think it's just best to stick on the high time frame because it shows you where price is going and makes it a lot easier to follow. Second here is we need good volume and movement toward the draw. You do not want to be trading in choppy markets, and you do not want to be trading low volume. When you're trading continuation, the whole point is to follow along with the trend. If we're not getting good volume and movement toward a draw, there's really no trend to follow. So just wait for a good movement toward a draw, and that's step 2. Step 3 here is you want to be waiting on retracements. So I drew out this little picture so I can kind of give you guys an example. When you are looking for retracements, right, you already want to pretty much have confirmation that we're headed in a certain direction. And the point of a retracement is just so that you don't FOMO into a trade and then the trade retraces and you get stopped out and then it runs to your TP. So for example, let's say that this is the current chart we're looking at and we're moving higher. If I'm looking to take a trade here, let's say we move up here, retrace, move up, and then at this point I decide, all right, I'm ready to enter. Maybe I long right here and put my stop loss somewhere over here, and then I'm looking to target this high. What's going to happen is if you long all the way up here, then you might get stopped out on this candle, on this retracement, and then it goes to your TP without you. So the point of waiting for a retracement is just so you don't FOMO into the trend and then you're not catching a good entry. So next, displacement. The last thing here is we want to see displacement after the retracement to show that the retracement isn't a reversal. So hopefully that makes sense to you guys, but basically it just means confirmation in the direction that we're looking to trade toward to show that the trade's going to hit. So in this case, right, going back to the previous idea, move up, move down, we move back up. This would be our retracement leg here, and we just want a little bit of displacement. You could enter somewhere in here, stop loss below this level, and then you can target the high that we would be going for, right? And this makes sure you have a protected entry because you're waiting for the displacement out after the retracement. All right, so now I'm going to show you guys a couple examples. Like I said already, I do have a lot of videos on this, so if you just want to see ample examples, there's plenty there, but I'll get into a few just for you guys that want to see now. All right, so boom, I just pulled up one of my backtesting sessions for you guys. But basically, just going to run you guys through a quick couple of trades and show you how I do this. So I won't lie, I'm not trying to fake this. I already looked through this day, so I know it's a winning trade. I'm not just going at this because I don't want to sit here and like uncut do 30 minutes of trading for you guys. I have a lot of other videos for that. I just want to show you guys what a good trade looks like. So that's the point of this. I already know this is going to be a winning trade, but just pay attention to what I'm looking for and I'll show you why I took this trade. So coming into a day like this, right, we have a draw above and we have a draw below. So I notice we edged this low, which means it might be a decent draw, but I just kind of want to go along with the trend as a continuation trader. I'm just looking to follow that trend toward whatever we're moving, like whichever draw we're moving toward, right? So in this case, I think we want to come to this low, but if we don't, that's okay. My job as a continuation trader is to just follow the trend. So what I'm going to do is come down to the 1 minute time frame here. We should be coming toward that low because when you look at something like this, right, we're a lot closer to this than we are all the way to this next high up here. So I notice we make a movement up here. Also, you can make note of this gap. We tapped into this hourly gap. So I'm seeing, okay, we're getting some movement and I see that we start coming back toward this draw. So if you look back at the higher time frame, came up here, we start to come back down clearly toward this draw, pretty much edged it, went back up, tapped in this gap. So let's see, right? Let's go down our checklist kind of. We've got, boom, movement toward a good draw, number 1. Number 2, we're getting some decent volume, a little bit choppy, but not bad. So now what we want to see is a little more confirmation. We're going toward this draw. And then we just want to see displacement in the direction to show that the trade could hit. So in this case here, boom, we get this displacement, right? There's a couple little retracements you could have chose to enter off of. You could see this one here, right? Little retracement and then entry. This just confirms that we have a good entry, a safe entry, and you want to put your stop loss ideally above a swing point so that you're not having an unprotected stop. And then we're just going to place the order here, targeting the low, and this one ends up flooding the low. Nice. So, like I said, I already played it. I already know that it won. But hopefully you get the idea here, right? We're heading toward this low. We see a retracement, right? You can look at all the time frames. Retracement, boom, displacement back in the direction. Retracement, displacement back in the direction. There's this 1 minute displacement. A lot of ways you can look at this. So move on to another example. Hopefully this starts to click for you guys. All right, did skip to the next day here. We've got a decent looking trade. So basically, again, we're looking at what are reasonable draws for price. So first thing I see is boom, we have this low. I'm noticing we're starting to make a pretty big down leg. So we could be coming down toward this low, right? We want to follow along with that trend. Or other option was on the lower time frame, we have a news high, which is going to be a relatively good draw for price. So I wanted to see us either come up toward that draw or obviously go the other direction if not. So in this case, we did get decent movement toward that draw. I kind of wanted to see a little bit more before I took something like this. You could potentially enter off of this, right? We have movement, retrace, displacement, and then you'd be break even somewhere in here, would have got break even. But if you did opt out of taking that, or if you want to take another entry, we also have this here. So as you'll see, once we don't take this out, starts to make me believe that we want to come lower, right? Maybe we took this out on ES, but as you'll see, we start trending lower and we get this nice movement toward our lower draw. And then we have a retracement in this leg, displacement back out of the leg. And then you can enter off of this candle, enter off this candle. You could wait for one more candle, right? And then you just take something somewhere in here, shorting down into this low. I should have taken it off the previous one, but I just wanted to show you guys. So it would be something like this if you took it here, and you'll just, again, following along with this trend, boom, pretty simple here, right? Just following this. All right, guys, I've got the last example here. So to start off, I would say we're in a pretty overall bearish downtrend. So I'm gonna mark out this is a reasonable high time frame draw. As I said before, I kind of like to have draws above marked out just in case. But basically, all we're doing here is looking to see us come down to that low, or if we start trending toward the high, we trade that way. So here, starting to get some good volume. We come up initially, but we do start flipping back down toward that draw. And like I said, wanting to see this lower draw, if you look at like the higher time frame, we have a nice like overall big retracement here, and then coming back in the direction of this draw. 15-minute candle starting to reject down hard. If you check the hourly candle, I'm liking the more bearish look here, so I will wait for one more confirmation. In this case, it's here, right? You've got this move up and then move back down, displacement back toward the draw. To me, this shows confirmation, right? We're coming through, inversing this 1 hour gap. Look at all the time frames. I would say this looks more bearish here, down into that low. So I would take the short here, and then we're going to target, like I said, the low. And in terms of a stop loss, you probably want to protect at least both these gaps. It's important, like I said, I have a protected stop. So you'd probably just go 1-to-1 on this one here and targeting the low. This one was a little bit slow, but ends up taking the low. Could have potentially been a break-even trade depending on how you treated this one. But yeah, same idea as the ones before, right? Just following along with that trend, waiting for a little bit of a retrace so we don't get a FOMO entry, get cooked, and then displacing back in the direction we want. Hopefully this video was helpful for you guys. If you have not started trading, I recommend you start with continuation. If you have already started trading and you just want to understand more about the markets, maybe like I said, you're trading ICT and it doesn't really make sense to you, I think continuation could be a great way to start off 2026 so that you can learn that and make 2026 a big trading year. So if you do have any questions about trading or just questions about continuation or whatever it may be, comment them below. And if you did learn anything from this video, please consider liking, subscribing, whatever it may be. And I hope to see you in the next video.